All right. Good evening, everybody. It is Wednesday night. What is the date? August 26th. It is 2020. Just so you guys know, this is the Hawkeye Trading Strategy Room. Let me go over a few disclaimers, then we'll jump right into the one alert that we have that I think that we've already kind of covered. If things get a little quiet tonight as far as alerts, we will probably end the session a little bit early. No need to sit and wait for paint to dry if it happens not to be an alert night. So trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before you decide to invest in the foreign exchange market, you want to make sure you carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not ever trade with money you cannot afford to lose. I have a, if it would make my wife worry, then I don't trade with it kind of rule. That's something that's good for you guys to do as well. Have some sort of rule that stops you from trading money that you do not have to lose. So you should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor. If you have any doubts, Al and myself are not financial advisors. My certificate expired a few years back, so we're not allowed to give you any sort of financial advice, but we will just do this for educational purposes. Room is live. We will be using both live and demo accounts to take trades if the trade presents itself. Again, no financial advice or recommendations will be provided by either one of us. Any trade that we might take during this session is not any sort of recommendation that you should jump in right on that particular trade. Make sure it fits your objectives, your risk appetite, because we all do things a little bit different. Again, past performance is not indicative of future results. And before you trade live, we always tell everybody to make sure they're trading with a written trade plan, something you have right in front of you that you've written down that tells you when you're going to enter, how you're going to exit, what are your targets going to be, and your risk management. So let me go ahead and close this out. Jump right in. I'm going to save that. Jump right into our news. We're looking at Wednesday 26th. There's really not a whole lot. We have a little Aussie stuff going on right now. It looks like it could get a little bit weaker. Nothing really major for tonight. However, as we get closer, remember this is towards the end of the month. It's the last full week of August. Next week we will step into September. So we are going to have a little bit more red folder day starting tomorrow morning at 8 in the morning when we start seeing federal people starting to speak about the U.S. dollar as well as the Canadian dollar. And then all of them on the Jackson Hole Symposium. So we've got a busy Thursday and Friday. Could have some ramifications, and just jumping just a little bit ahead, keep aware of what's going on. Next week is full of news, and so you want to be aware of those, especially when markets open. We could experience some greater volatility, which causes our trading strategy when we have excessive volatility to get whipsawed. So sometimes it's just better to sit out of a trade. So jumping in, looking at the last notification that we had from AIRIS, it was a U.S. CAD at 8 o'clock Central Time. So let's go ahead and jump in. We will look at this and see what we got. If you should happen to have a question, make sure you use the Q&A for that. That will help. It pops up on my screen. Al will be able to see it. Myself will be able to see it. And that will help us as well if you can use the Q&A. And then I'm going to go ahead and go basic stuff tonight. So let me go ahead. You guys that are in the room, we're going to go very basic to start and keep it very simple so you guys can see what we're doing.
I'm not seeing your screen there, Brian.
Oh, I'm not sharing my screen. Well, it says I'm sharing my screen.
It is. Maybe I'm just not seeing it.
Let me double check. I'll stop sharing and share again just to make sure. No worries. There we go. I am sharing my screen according to the board. If you can't see me, you can type that in the chat box. Say we can't see you, or yes. If one person will do that, that will verify that we in fact do have. You just have one person put a yes in there, then we know we have screen. I'm according to my panel. Okay, so Saeed says he can see it, so that means Al, it is on your back tonight. You cannot see it.
That means it's okay.
If one, as I tell my fourth graders every day, if one can see it, then all should be able to. And if you can't, that means it's on your end. Yeah, I do.
Yeah, the question is, why is am I not seeing this thing? Okay, all right,
Hey,
go ahead.
we'll figure it out as we go. So, guys, I'm just going to quickly go through some great news. I don't know how much Al has shared in the morning. We have been working. We have with TradingView. We use TradingView with our strategy because it's an easy charting system. It's very easy to manage. Has a nice demo account. I do not put live trades on my TradingView, although you could link it up to a few brokers. I like Lucror for mine. TradingView, however, has some great advantages as well. We have a few developers from the BK2 trading group that I and Al run on outside of Auvoria Prime, and we have a couple of developers who came up with some tools that are very, very influential. They're sometimes it may be confusing at first, but they're very, very simple and very, very mechanical. The thing about trading is you want to keep it as boring and simple as possible. So what the problem with TradingView is you have to pay for a premium to get as many tools on here as you need. And we have some developers who have created the MMA, the FPRP, the MRSI, and the RCS. In total, there's over 20 indicators loaded into these 4 tools. Those are going to be offered to you guys in the very, very near future for a free 30-day trial. We don't know when that's going to be unveiled yet, but that's going to be the introduction to these tools that you will have completely free as an Auvoria Prime member, and then they will be able to be added on to your subscription if you so choose to do so, which we would highly encourage you to imitate what we see. We don't use all the tools all the time. As a matter of fact, many times we will turn them off, but let me just go quickly. This is just RSIs overlapping. We will talk a little bit about this green bar here shortly. And then this squiggly lines, that means absolutely nothing to most people, but it's a powerful, powerful tool if used in the right way. And we will talk about that as we develop our strategy tonight. So looking at this, our Canadian, we had a 15-minute. I'm going to go ahead and blow up the 15-minute. This is dash line right here is just our session open. And it's been a while since I've led a session, so I've got to remember how to do all this stuff too. We had our alert right here at the 20. So that's my alert line. I like to place a vertical line to give me an idea where the alert occurred at. Going back to it was a descending. So here in the Hawkeye strategy room, when you have a descending, we like to use this tool over here. You don't have to. You can draw any sort of trend line that you want. But we found that this is very, very simple to do. If you have a descending, you start with a high, and then you go to a low, which I like this one better, even though it's behind it. Then you go to the next high. And in this case, I'm going to take it to the next low, and it's already broke out. So I know I'm wrong. Okay. I know that that's not the wedge alert. So I'm going to really redraw this. And I wanted to show you how it should not look. You should not have a breakout before your alert happens. So let me go back, and I'm going to remove it and tell you how I'd really do it. I'd come in here. Here's my high. Now I'm going to take my low. Then I'm going to take my high. And we still may have already broken out, but I'm going to flatten this out. What time is it right now? It's 8:30. Yeah, we could have very well broken out, but this would have been my candle. Probably could have smudged this C. Let me get this out of here. Probably could have actually put this C right on the alert. It does not change the picture. We have just cleared off of this particular one. So let's go see what we would have done. Okay, so on the 15-minute, we've drawn our chart and our wedge. I like to drop now. Al will drop down to the 5-minute. I like to drop down to the 1 minute for precision, a little bit tighter entry. Come in here and clean it up. I want it to be dead on. So I come in here to my A, and I want to see multiple things happen. I want to see multiple touches if possible. Now, I could very easily come back here and do this right here, and it does not change my picture. Not one. It just stretched it because this is where my B was. And here's B. So it's a pretty much a horizontal line. And that's what I like. And notice we had a breach here, and that's okay. It's not even a pip. So just understand it's not in the pip. So let me clean this up just a little bit more. Bring this in and level it off. Trying to get that somewhat clean. There we go, close enough. Normally what we would do, and Al, are you still putting your horizontal lines here?
No,
Parallel?
actually, what I've been doing, Brian, is first off, I do use the 1 minute chart to tweak my chart. But what I've been doing is I've been putting a parallel line right at the C in this case.
From here to here, you're going
parallel?
just
a horizontal ray.
Straight across?
Straight across. And when I get to close above that, that's where I enter.
That's interesting. Let me show you what I do, and then we'll talk about what Al's been doing, because I do it a little bit different.
Both systems work. I find it just to be a little bit simpler and just as effective.
So what I'm doing, guys, is I'm putting the spread. So if I'm looking at this particular pair and I'm guessing it's around 2 pips. So I'm wanting to be about 2 pips away from the entry, and this would be considered my entry zone. This gives me a place. I'm a happy trigger. I don't know if you guys are happy triggers or not. I'm pretty aggressive with my trading. So I always have a little bit, especially when we go down to lower time frames, I have a little bit of a problem of being a little bit impatient. So with that in mind, let me see if my measurements are correct. They're pretty close. It's actually would be right about here. You can see it's still played out. What I would have done, because I'm a happy trigger, I actually would have got in right here. And then I probably would have got in again right here, because this is a retest of this. Now, would I take it one more time? It depends on some other factors at this point. I'll have to look, because now we're starting to break down. I think we would be back lower down here as a possible opportunity. So that would be one. But I'm also never going to predict on these. They give us a descending. Hawkeye, Alan, myself, and Matt have never made predictions on which way it's going to break out. We found that when you try to say, well, if it's descending, I want to go long. If it's ascending, I want to go short. When you do that, you limit your mind and you end up not seeing things clearly. Now, what I do want you to notice is this trend line was not placed there. This was from the B to the C, but look what happened. It bounced, came, broke, and it became resistance all the way through to the break. Even if we extended this out to the break, and it falls within our 2 pips again. So this is what it's actually retesting this trend line right here. If I was to able to extend C straight out, we're actually on the top side of this trend line. So basically what you're doing is you are trading trend. What we do like to do, though, is come in here and do the same type of thing, just in case we go on the other side. We want to prepare for both. We're not going to limit ourselves to just one, just in case. So I'm going to change that color, go to red. It tells me I want to be short. So all these are entry zones. That's all they are. So that's not completely precise, but it's close enough to get my happy trigger finger a chance to get in. So here's what we do. We've done our duty. We've done our drawing. We'll go in. I like to look at it like this. Blow it up a little bit like that on my 1. I use the 5 minute for me, and I'll let Al take over here in a moment. Usually for the 5 minute, I use it to do my trade management. My 15 is basically to identify the wedge alert and draw the initial wedge. Other than that, I do not monitor this chart. I monitor these two. So what does all this noise down here mean? Okay, I don't use RSI to the extent that Al does. I'm going to let him explain that. I do use these green lines. These green lines are actually moving averages. It's the whole moving average. If you're familiar with the whole moving average, normally you would have it plotted on your chart. The problem is we have other moving averages that we also employ, and we thought it would be confusing to have that overlaid. So we created a tool. These are all together combined. So you actually have 3 different tools happening. So we have a long position on the 15. If we scoot this over to the end of this one, then you notice you have a long and a long for the whole moving average, and then you have now a long, long, and long. So this would have been a good entry. This could have been a little bit more, you have to go further up, but this would have been a nice entry, because at that same point, just before, you had green, green, and then it flipped green. And that's a good sign. That's only one tool to give you confirmation. The biggest thing that I do, and what I've done lately, guys, I'm a 4th grade teacher. So what I do is I get up around 4 o'clock Central Time, 4:30, and I look for any alerts. And what I mainly do is I look at this chart right here. I want to know, are there any alerts that fit the strength meter? This is a strength meter. Now, Al doesn't show all his pairs on 15, or he used to not. If you notice, I don't on the other ones, right? Particularly right now, we're looking at US CAD, US CAD. So I want to know what the big picture is on the 15th. So right now, the strongest currency is the Kiwi. Well, we're not doing with the Kiwi. The next strongest is the US dollar. Now, I really would prefer having a wedge alert right now with the US dollar being that high and the Aussie being that low. That would be perfect for me. But if you look at US CAD, there's still a 3-point spread that qualifies me for going long. I can do it. Now, understand in the evening times, the strength meter is not near as powerful as it is during the London and the US Open cross. It's dead on for the most part. Right before the US Open, it's been powerful for me. I basically can create, from a wedge and see the number, and I take it, and I pretty much do a set and forget. I wouldn't advise that if you can possibly do it, not do it, but I do a set and forget. And when I get to school, I found out if I hit my target or I hit my stop. So these are strength meters. So we're comparing at the 15-minute mark which ones are strong against the other pair. And that gives us an idea. If the US is strong and the Canadian dollar is down here, the tendency, the momentum, the push is higher up. Al, what can you add to this? Are you still with me now?
Yeah, I'm still here. Actually, you're doing great. I can't really add a whole lot other than the fact that if you put the exponential moving averages on, you'll see where it broke, and it hit right on the 62 moving average on the 15-minute chart.
Okay, guys, so you guys will realize, let's blow this up a little bit more. It can get pretty noisy. Take one step at a time. When you get these tools and they're made available to you, make sure you attend the sessions and let Alan, myself, and Matt kind of guide you, Evo, guide you through what these all are. Otherwise, you're going to go, man, there's so much noise. There really isn't. You just have to know the reason why you have the noise. Now, I'm looking at the 15-minute. Right now, we've got a little bit of a confusion time. We have our RSIs pointing down. We have 2 moving averages pointing up, and we have 2 moving averages pointing pretty much down. So we're going to have a battle here. So we have to determine our playground. You have to know from the break, can I get my 7 pips? The powerful part about the AIRIS, and there's multiple ways to do this. This is just the way that Al and I have been successful in finding to get a trade done, be as efficient as possible with our pips, get in, get out, because you really don't want to stay in a whole bunch of time unless you're doing long-term trading. And I don't believe with a 15-minute chart you should be in any longer than 2 hours at most to wait to get your trade and get out. It should never. Now, we've waited a couple hours to finally have the break of the wedge, but usually an average trade lasts 15 to 30 minutes at most once you've taken the trade. So you want to be very efficient with your pips. So we're taking a 2% position of our total account size, and we're aiming for 7 pips. So basically what we're doing, I'm going to put this present, show you that we're really not going that far. If we come here and put that in, I drag this, let me fix that here. This is if we enter right at the green line that I showed you earlier, or just below, we're going to try and get, it's going to play fickle to me today, just about 7 pips. Now, we usually say 7 pip stop, but I found that I usually like to be a little bit more conservative with that. I don't mind going 10 to 15, but I try not to get stopped out. I let the price tell me. So look how we're really not going that far. That's the key. So if you have maximum position size of 2% of your count and you go 7 pips, you're going to average about 2% a day. All you have to do is have one of those trades. What causes traders to get into problems is over trading or having a happy trigger like I do and getting in not when you really wanted to. Now, I've traded for many years now, so I know my personality. So I know how to overcome that trigger happy stuff. So that's just reflecting that we're really not trying to go too far. We're really looking at our playground. We're actually targeting just below where we've already been. Now, if this comes back into our wedge, we can take this trade, and I'll show you what that looks like. And my bet is we'll be closer to here, which means we may have a grind. We just have to wait when it does come into our zone, whether we're able to take it or not. And then the weird part about trading, and Al has missed me over the last few weeks because of school, because we'll sit here and we'll talk about trading. You know, sometimes it gets really quiet in the room on Mondays. We don't talk about anything, but because trading should be a business, it should be somewhat mechanical and boring. You should not feel like you're getting, I got to be entertained for an hour and a half or 2 hours, you know, because that's hard to do. I've tried to do that with fourth graders, and it's almost impossible to entertain them. You have to give them some work to do. So from time to time, we will see a wedge inside of a wedge, or like right now, this may be a time where I would go, I'm seeing this now. Here's a high, here's a low, here's a high, and here's a wedge inside the wedge. Could I do that? Sure, I could
Absolutely.
do that. But you got to understand, IRIS is an artificial intelligence system that is identifying a bunch of parameters before it gives us our alert. The only thing that we're doing here is identifying what our eyeballs see. Notice we've come back into the wedge. We could break down right here, but it's still valid. It's just not near as qualified as when a artificial intelligence system grabs that wedge for you. And so this is the safe one. But I want you again to pay attention to what's happening in the big picture. I hope you guys are noticing this. I'm going to kind of guide it this way like that. I see it, but I've been trading for a while. I don't know how many long-termers we have here as far as trading. But I want you to notice, I'm going to fix this to connect to the C line. And I know my angle's a little bit off, but I want you to know what's happening here. There's your extended trend line. So I remember when we said some people like to draw trend lines, some people do the triangle. You want to be aware of all of the lines that are involved, because they all have some sort of significance. We don't know which direction it's going to go. We don't know how powerful it's going to bounce off. We don't know any of that. Notice right now in the 1 minute, it is red. So this would not be necessarily a great time to be a buyer. If you're wanting to have all green, now we're green. And then now we're red. And then now we're green. So the 1 minute does flip a lot with the RCS. That's not the one we're worried about. Let's go back and look at 15. So still, US is 6, Canadian is 3. So with the volume that we currently have in the market right now, it is not even 9 o'clock yet Central Time. It's just now going to be picking up. Okay, so we had a break of that zone that we did. If it comes back, I'll go ahead and take a bite at it. So this is an aggressive. Let me just make sure you guys understand this is aggressive. But with everything going on, I'm going to go ahead and create a new. I'm going to take profit, and I'm going to set my stop a little bit lower down, just like that, and go. So I am now in this trade, and I'm going to go ahead and show you guys what that looks like when I pull this up. So there's my entry. I'm going to clean up my stop. And if I happen to lose you guys tonight, Al's going to be here to take over, if he's still here to take over. We have a hurricane barreling in on us, and the winds are, we're pretty ways away from the coast, but we have some high winds, some major storms coming through. So if a connection loses, I apologize. It's pretty windy right now. Heard some heavy thunders. I'm seeing some lightning. So the first wave of the hurricane is coming up into Texas. So now what do we do? Now what do? We come in here and we manage on our 5-minute chart. I love to manage on my 5-minute chart because again, remember, I'm trigger happy. I can jump into a trade too quick, and then I can get out too early. But I really don't want to be stopped out here. I am going to watch and see if it comes down to this, probably our moving average right here. If it closes below this moving average, I'm going to save my pips and possibly consider going long here. Possible, depending on what everything else says. So you do have to manage.
Say, Brian.
Now it's just a waiting game.
See, Brian?
Yes.
And it's 5 minutes to 10. I'm going to bail because I have another meeting to go to.
Absolutely. Keep me posted on it.
I'll keep you posted. The link is in the Telegram if so when you get done. And I'll see you there.
Absolutely.
And
Thank you, my
sorry,
friend. Thank
everybody,
you for
but I
being
got to
here.
bail. We have too many things going on tonight.
It's all right, my friend. We'll see you in the morning.
Okay.
So now it's just a waiting game. And are there any questions? Use the Q&A. I don't mind helping out at all. I love doing this. This is the highlight of my day, pretty much. We've been teaching fourth graders virtually. That's not a highlight anymore. So it's a good thing. It's a good thing to be able to talk to some adults and see some adults. So what Al is doing right now is, to be honest, we're looking at another possible indicator. We're constantly, Auvoria Prime is constantly looking at new opportunities for traders to profit from. So we're going to be doing some beta testing help since Al and I are experienced manual traders. So right now, again, I'm waiting for a signal. There's no reason why I couldn't, oh, I did that wrong. Let me go back and fix that. I'm going to lock that down, if it'll lock it. So there's no reason for me to do anything yet because it's just going to be, everything's still green. We're kind of in this middle of no man's land. At the current, US CAD is still strong. Now, I have a feeling due to the hurricane, this will impact the US CAD. We have in Port Arthur, Texas, in the southeastern corner, Houston, Galveston, all that area is loaded with petroleum systems and refineries. They were built prior to major hurricanes, so they're supposed to hold up. But if that happens and we have a storm surge like they're talking 40 miles in, we could have a shutdown of the petroleum plants, which would definitely kind of jack the prices up of oil, which Canadian are heavy on. And so that could push that Canadian dollar up and thrusting this down. It may not. We're not going to be making predictions because we can't. Hey, Michael, I see you in the room, buddy. It's been a long day. Been a long day. We've been busy. I'm going to, I think I can do this. I'm going to allow you guys to talk if you want to. It's just about 9 of us, I guess. I'm going to allow you, you should be able to see your microphone pop up, allowing you to talk. If there's a question, make sure you just open your mic up instead of using the chat box. That's just as fine. I just have to, for recording purposes, repeat what you're, you'll be recorded, never mind. So it'll make it a little bit easier if you happen to have a question. Again, once we're in a trade, it's pretty much just sit and wait. There's really nothing more until we get another alert, and I haven't got another alert. Now, while we're doing this, let's go jump to another screen just to show you this is multiple strategies. It's very, very simple. It's not, I mean, it looks nasty sometimes when you see all this noise, and we can easily come in here and clean it up and do this. And do this, and it's just very, very simple. And you can do that. You can trade with just wedges. You don't need anything else other than price action. However, I would not personally, after years of experience. Do you know any good books for scalping? Oh man, there are a few. Let me do some thoughts on that, because most of the time when scalping comes, I've got a whole library of books. But I have found that many of the scalpers, they're one-hit wonders pretty much. Their strategy will work for a short time and then it changes. But let me give some thought to that. It's a great question. And I've got a whole library. I'd have to go look inside that library and find that. Just so you guys remind you of this, I hope I don't know if I said this earlier while we're sitting here waiting. Let me go ahead and pull this up and make sure I put this in the chat box for you guys. This is Wednesday night. I think this is Wednesday night. We just have a brand new Hawkeye at Auvoria Prime email address. Let me put that in the chat box for you guys as well. What we're doing now is Al and I are going to do our best to answer any questions about tools that deal with the wedge strategy. Maybe you take a screenshot of your wedge and you need some coaching on that. If you need some individual coaching, we're going to make that available when time allows for you guys. We want this to be more interactive because Al and I come from a background leading BK2 trading where we were highly engaged back and forth with our traders. When we shifted over to Auvoria Prime, due to security reasons, we had to go to a webinar situation, which really kind of limited the overall interaction. However, it does protect us when it comes to hacking. So if by chance you have questions regarding the strategy, we have the Hawkeye channel, but that's just us posting things. But we have an email address now that you can always send a picture, but it must be wedge related. Okay, many of our trades, it comes across as very complex. They're really not. So we want to just make sure we have ourselves available to answer. There's a question in the Q&A. Can you briefly describe what we are doing when price breakout from the big triangle? Absolutely. Let's do that. Let's go for the beginning. I'm already in this trade. So can we, let's go back and really talk about that one. Let's go see if there's not an Aussie except it's 715. Let's go that 1915 US Swiss. US Swiss has been really fun. And we'll come back and check on this one here in a moment. US Swiss. So here, let's clear all this noise off and get real basic. Is that cool with you guys? Is that all right? I'm hoping so. Thumbs up. Yes. I'm going to go real basic with you guys, and then we'll kind of grow from there. I'm going to turn this off too. Complete price action. So what we do is we get the alert. The alert was at 1915. Again, 1915 is not going to be normally a great time to trade. We're going to first mark our 1915 mark. Okay, and we can ignore all this later. Back testing when you know what's going to happen in the front and at the end is not good. It's when you don't know. So let's go in here, and what kind of alert was it? It was an ascending. So if it's ascending, we start from the bottom, and I would say that would be my bottom. This would be my top, and then my C would be here, and then I would have done it just like that. Okay, so what do we do when it breaks out? Remember I said I had happy fingers. So in this case, I would come in and I would go down to my 1 minute chart and I would clean it up a bit. I want to be very precise. We're only going for 7 pips. So we better be really good at getting really precise on our trend lines. If we can avoid any sort of breakage, but yet snug this C real close to the alert, we have, notice this trend line right here, inside. A to B is this trend, and then it broke. And then it went down, B to C, and it stayed on this trend line. And then it bounced off the bottom. And now we're in the bottom part from B to D, and we broke. So let me show you what we do. Let me see if I can remember how to do this, if it will let me do it. So I'm going to go bar replay, and I'm just going to go right about here. Okay, this is before it broke. So this is a great analysis of how we can do this. We break. So we're going to play this thing through, if I remember how to do it. Okay, so let me slide this over, get this out of the way. And where'd my play button go? Nope. Let's look down here. There it is. I don't know how it got down there because it's usually right here for me. Okay, there we go. So we're going to go and play this back. So we're going to take it piece by piece. So now we're coming up. We've touched the line. And so I'm going to pause it right here because I know it's getting ready to happen. So I'm going to come in just like I always would do. And this is my My personal thing. If you guys don't want to do this and it doesn't help you, don't do it. Don't do it. But I have to have a line that's parallel to give me permission to have an entry zone. And it's always 2 pips. It's the spread, basically. And I'm going to make this green. I'm not predicting which side it's going to go, but we already know, since we saw it, it's going to go to the upside. So this is a descending, and we're going to go to the upside. So let me blow it up a little bit bigger. So what we're waiting for on the wedge is it's really a consolidation. On a higher time frame, all this is what we call a basing. Now, Al and myself have been trained through the Online Trading Academy and some other schools of thought, lots of books. You can call it what you want, but it's pretty much a consolidation, a basing, and a breakout strategy. Wedge is one of the most popular ways of trading breakout. So what I'm looking for is an opportunity within 2 pips, this is a little high, that I feel confident I can get in. So anywhere in here, I can take the trade. Some people wait for it to break the wedge. Once it comes to here, if it touches the wedge, that's when they get in. That's one way of doing it. Or some people want to go all the way out, and then come back in. I would love to see it come up to here to the 2 pips and then fall back down and take it there, but I can take it based on candle analysis. So let's go candle by candle. If it does it for me right now, that would be nice. There's one. Now, in my early days, as soon as it broke, I'm in. Is there anything wrong with that? No, but it could very well come right back down to here again. Okay, so Al likes to see 2 blue candles, then a red, and then go. That's what he likes to do. That's one of his strategies. I would love to see 2 candles in here before it breaks out. If I don't, it breaks higher up. Then the next time it comes back in, I get in. So we're waiting for the breakout. You have to determine, like we said at the very beginning in the disclaimer, you have to have your own set of rule of how are you going to enter? Because we're going with such precision. We're only shooting for 7 pips. We're risking 2% to go 7 pips, and that includes spread. Because it used to be when we first started going for 5 pips, but we found that our spread was chewing up our profit, so our profit wasn't near as high, so we just bumped it up to 7. So what we're doing is looking for a place to enter. Okay, so I have two blue candles. Okay, I have 2 blue candles. This one still, if you look closely and you do price action analysis on these candles, this is still a seller's candle. So Al likes to do this. Al would consider, because of the way it looks, if price breaks above here, he's in, because that's a seller's candle there. Okay, so that's one option. Or if you're aggressive, you can take it, wait for it to touch here, or you can wait for it to go here. There's multiple ways to get in, but I'm going to get in somewhere in here. Right now, I'm not convinced I want to take it yet. Now, that's where I would have taken it. When that thing came down and touched here, you have plenty of time. That's a 1-minute candle, but you would have seen that. You would have watched it. So what I would have done is I would have gone long right here. Now, when I put that here, I understand there is a 2-pip spread. Okay, so even though I would have clicked my buy order right here, I would have been filled right here, which still lies within my error zone. Hopefully that makes sense to everybody. Then I'm going to drag this 7 pips, and I really don't like it 7. I'm going to go a little bit further, and then I'm going to come in here. It looks huge on a 1-minute chart, but it's really not. I'm used to trading daily charts, and this is kind of crazy for me. So I want to be below this pivot, and I may even consider my stop below right here. And remember, wherever your stop is, it's 2 pips away because of spread, so be aware of that. So now we're going to lock this thing in, and that way it doesn't move. So I am in the trade right about here, even though price came, I clicked it right here. So now what do? We're in the trade. So on this is our entry point. Anywhere inside of here, I would have been perfectly happy, and it would have followed my rules, and it protects me from being trigger happy. And then we play the waiting game. We just go candle by candle. You could have got on here. You could have got in there and that red and move up. You could have got in there You could have got in right when it came back to this zone. Okay, perfectly. Anywhere in here within that framework is okay entry, in my opinion, if the candles show it. Now, also notice on the 1 minute, this still shows US strong, Swiss. That's going to flip back and forth. Anytime you have these big movements down, Swiss on the 1 minute is going to flip. So I don't pay attention to the RCS on the 1 minute chart. I pay attention to RCS on the 15. So let's see what happens. Still good to go. We're still within the bounds. Now we're happy again. Now we're sad again. Now we're sad still. Now we're happy. We're confident. And this is what happens when you sit and stare at this thing all day long is you go, oh, we're going to make it. And then all of a sudden it goes, oh, maybe not. Then, oh, we're going to make it. And then maybe not. Now we're outside that zone. Could we come back and take it again? If we miss these, sure, absolutely. Because the trend line's still in play. All you're doing is playing a bounce of a trend line. Just remember, this trend line is descending, so it has to go further down to reach that line now. That means you may be making lower lows, which means it's a possible trend change. That's why many times, even though I set my stop farther away, I'm looking for a possible trade. Now, notice I have no moving averages on this at all, telling me anything. I am strictly doing price action. And happy still, not happy, wondering I could have got here on this touch. Now understand, some traders use this on a 15-minute chart, waiting for the breakout of the wedge and touching on a 15. Some people like to wait for the breakout on the 5 and wait for a retouch on the 5. We're going for precision and fast, more like not quite scalping, Elias, but close to scalping as you can with this type of thing. You're going in real quick and trying to get that 7 pip based on momentum. So we're waiting here, and we could have taken it right here because on a 5-minute chart, that would have been a retouch of that line. And we're kind of happy. So now we have another trend starting. If you notice, there's another trend line right here going up. So that's a nice one. We're making higher highs, not by much, but we definitely are making higher lows. Definitely higher high. That's nice. That does not mean we won't come back down here. We have every potential to do that. And now we're really, really happy. And this is where we get trigger happy. Now, here's what we do as we manage our trade here in Hawkeye. If we get to 5 pips and the overall picture starts to change, we will get out of the trade with 5 pips. But if you notice on the RCS, we are strong US, weak the Swiss, and we had a strong candle. The picture doesn't look like it wants to change. The power is still pointing up. Our trend is still in place. So what I would be normally doing is saying, okay, here's what my trend is now. And this is how we save pips on the backside. So I have a stop zone. Okay, so my stop zone would look like this. When would I get out? Okay, I'm going to put this in here so you can, if I'm going too fast or I'm confusing you, let me know. This becomes second nature for me. So right here is my stop zone. My bet is it's going to coordinate with some of my other tools for confirmation, but this is my stop zone. So if we break down in here, I have to consider getting out. That's how I feel very confident in not having to lose 7 pips every time. Because once we develop a new trend and we put a zone in play, then we have a parameter to also exit out of. I don't think I'm going to need it. Could though. And see, right now I was at 5 pips right here. I could have taken it, but the picture hasn't changed overall. There's nothing telling me jump ship before you get your 7 pips. And this is what we look like now. This is today. So we came in, we never reached, but I got in my stop zone and I would have got out right here. I would have got out right here because it came below my stop zone. So what did I make? Break even. And that's how you avoid having strong loss. Now, if you look at things, the Swiss has gotten stronger. The picture's changing. So I would have easily got out. Let me move this over here. I hate when this thing does that. If it will let me, I got to unlock it. I come in here, and so really what my picture looks like is this. Risk reward. We talk about risk reward, And let me get this through, show you guys again. It went back on me. Now we're talking risk reward. We would have been good to get out at 5, but if we start seeing the trend change, we could have got out here again, but it never touched our bottom. So each time we bounce off this bottom zone of selling and closing our position, we are making slight profit. Very slight, but it's better than losing. Right here. That's where I've been getting out. So technically, I would have made profit. So I'd have brought this up. I would have made what, 3 pips out of it. So pretty much break even once you take your pip spread. So hopefully that answers the question as far as how do you know when to take a breakout, you know, describing when a price breakout, what you do. You're waiting for that parameter. You need to have a rule in place of, okay, maybe you're like Al. Al doesn't use this line anymore. He just draws a horizontal line from a certain point. I don't know what point he does. That's his horizontal line that he uses, but he does it this way. This is how I do it, and it keeps me from being trigger happy. Let's go back and look at our US CAD, see what's going on there, and nothing. Absolutely nothing. So right now we're sitting in a place where, okay, where's our trend? Our trend is right here. So if this thing breaks down to here, I'm going to close this up. I'm going to go ahead and bring my stop. I got to unlock it again. Truly, my stop would be about right here. That's what I'm looking for. Now, I don't want to put my hard stop there because it could very well come right here and then bounce off of it. But right now, there's nothing saying that this is just going to be a wonderful trade. Again, it's kind of the same picture. Even though this trend right here is happening, if it breaks down, it has to go further down to hit our wedge. That means we're in a possible trend change. And the wedge picture has changed now. You can see this happening now. Hopefully you guys, and again, this is not an alert from Auvoria Prime. This is my eyeballs seeing the overall picket. I'm going to move this so it doesn't confuse you guys, because this is our handmade one. Any questions now? I hope sis that helped a little bit. The one I'm really wishing we would get an alert on is that Aussie one, because of the strength difference, and being that that's their market's now open. That's when you get the Kiwi ones and the Aussie pairs at this time, they're a little bit more secure because their markets are open. Whereas when you get the US CAD, neither one of our markets are really open, so it's just kind of not all that not that big of a deal. Yeah, so it's a little bit boring as far as volatility. We really don't know which direction it's going to go. It's a little bit more risky. I seem to take a lot less trades in the evening times during this time than in the mornings. But when I do take a trade in the evening, it's usually going to work out. The difference is you have to be willing to stay up. For me, being in the central time zone, you have to be able to stay up a little longer to watch it. And normally that's when I will go, okay, I'm not staying up any longer. This is what I would normally do. Okay, I'm tired. I'm going to go ahead and go to bed. Where's my line? And I would use my moving average. So I want to know my moving average. And I'd go over to my 5-minute chart, to be honest, and pay attention to that one. And it gets to be noisy here, so hang tight, and I'll squeeze it up again. And if you notice my 62, the purple line, you can see it's 60. It's an MM3. That's 62. And as you guys get used to the tools, you'll know what the colors mean. This is a perfect order for it to go up. Green, yellow, purple. That's in a perfect order to go up. Okay. But that doesn't mean it will. So if you notice our moving average, just like we're trading with algorithmic help, all over the world are using the same thing. Some of them are completely automated, so they're looking for certain moving averages to bounce off of. So we're playing that kind of as well. So what I would do is I would do this. I'd move my stop, to 2 to 4 pips away from the last moving average, because that means it's going to have to go through the green one, it's going to have to go through the yellow one, it's going to have to go through this wedge bottom that I created that I could see on my own, and then it's going to have to go through the purple one. Can it? Sure. Could it come all the way down here and bounce off? Absolutely. My bet is if it comes all the way down through here, it's going to go down all the way down, back down to here, and then bounce back up. That's too big of a loss for me. I'd rather take a loss here, a small loss, and then get back in as a buyer down here if the price allowed me to do that and the picture didn't change. Now, again, if you are not very keen on triangles, it's not your thing, you can very easily come in. I like the triangle because it does some mechanical things that my own eyeballs can't do. I'm going to remove these lines, guys, just so you guys can see what I'm doing. Go back to your 15. It's very, very simple. All you have to do is find trends. Wedge is all about trend. So you'd say, okay, here's my trend here. And then I would do another one, and here's my trend here. And so the wedge is just a crossing of trend lines. Excuse me. It's very, I like the big triangle because it gives me some inside information. And many times I have an aggressive strategy that I won't go over tonight that I will actually trade inside. I would have taken a long right here based on what this was doing. I would have taken it right at the bottom. So I wouldn't have waited for a breakout, but mainly wedges until you get good at them. Don't do it inside. You have to know what you're looking for here. And it takes some time. But there are trades available. Just like this wedge developed, this trade's very valid. Hey, we had a breakout. How about that? Finally, a bigger move. Let's see what happens. So looking at our power grid here, the US dollar is the strongest currency now. CAD has moved up. There's still 3 apart, but we have a strong 15-minute candle. What time is it right now? We're still 8 minutes from close, though, of that candle. So we're going to look at a 5 minute since we're 3 minutes from that. Let's see what it looks like on the big on a 5 minute candle structure. And see how it's not quite as precise with the trend lines. You can be a little bit off, and we're really looking for precision. It just takes a little practice to get used to the triangle. Other than that, it's not bad. We really need to get a higher high, close above this A. We need to be able to push above and close above the A, because what we're doing is reacting to the past. Always look left, by the way. I want you to know where our profit was. We didn't look back to this, but our profit is right before this high. So we could very well get real close and see it fall back down just like it did here. So my bet is I'm probably going to take my take profit, come down a little bit lower, modify it, take my 6 pips instead of 7, take the profit and run before it has the potential to move back down and make the same move. It went from here to here pretty much. This is the high, and it didn't stop going down until it came here. We really need to make it back up here. Otherwise, we're in a downtrend, and we're long, and we don't want to be in a downtrend while we're long. Again, we're having a 5 minute candle. All the moving averages are in our favor. Let's look at the moving averages on the 15 to see what's happening there. And we just manage. Let me go ahead and unlock. Yeah, so look what's happening. We're bouncing off of this one. So our green and yellow are in order, but our orange one's not. Okay, so that's what we're fighting. So if we can get this thing to bust up and close, then this green moving average is going to cross. That's a great sign for us. That's a great sign for us. So you have to be aware of these moving averages because that's a potential place for it to pause. Now, if you've been with me on Monday nights, it's outside of the Auvoria Prime sessions. I teach a trading session. This is a little bit more advanced. We always, on Wednesday nights, we try to do at least 30 minutes of basic and then kind of get digging into some advanced ideas of trading. A few years back, I pretty much was blowing up my accounts and on swing trading. And so I went back to the basics of everything. Basically, I tried to not forget everything I learned, but stop listening to all the noise and stop listening to all the social media about try this strategy, try this strategy, try this strategy. You can pay, you know, $4,000 for this thing. This will get you this kind of money. I stopped listening to that stuff. And I went back to just the raw price action, because that's my background is in trading. When I came out of college, I went into banking first, and then I went into Series 7 licensed financial advisor. So I was into trading, never saw a chart, never needed a chart, because the big institutions, governments, they don't pay attention to charts. So it was only about 7 or 8 years ago I was introduced to charts and technical analysis, but I understood price. And the key thing to understand about price is it's manipulated by somebody other than you that has more money than you, and you have to take your profits when you can. But inside of what I saw is complete chaos. When I used to look at a chart, it used to look just like this RCS to me, just noise, just absolute crazy noise, made no sense. So I began to do something with each pair on my swing trading on daily charts. I began to draw lines, just horizontal lines, where price always seemed to stop in the past, where it always seemed to react in the past. And I found something inside of there where there was chaos, all of a sudden became very, very perfect parallel lines of order. And so me with another friend of mine who is a programmer developed a new system of analysis, and it's called this FPRP. So I'm going to show what that is: supply and demand. And this is pretty much where I can expect price to react. So if you look at where our demand line is right here, it's the same place as our moving average. Where did we stop? At the A. I didn't know that when I drew this triangle. This is a demand. What was once demand, if price is below, it becomes resistance, or support and resistance. So we have to break this. If we intend to make our target, we have to break this strong area of demand at 31.55. And that could be difficult to do. Now you'll notice when I squinch up my screen, the next supply is right up here. So in the longer term, we could very well make it to 32.17. A big wall is the blue. And that's why I like to drop it down to the 5 minutes, because the 5 minute comes into play because we're doing more day trading, more scalping type stuff. Where's the 5 minute land? And it comes into play right here. If you notice, the 5 minute has a blue line. Blue is strong resistance. Okay, it's a wall. So that doesn't mean we're not going to be successful in our trade. But if I'd have known that going in, I would have been maybe a little bit more cautious getting in. But once we break it, what was once resistance becomes support. And we have momentum on our side, so I'm not concerned there. So it's just a matter of being aware where price, and these are price points where price has always seemed to react. And we have it on that. So we can also drop down with this, and I don't use this very often. I just turn it on to see where it's at, then I turn it off, because it does become too much noise. But I definitely like to use it and have a visual understanding of price action on this chart. Look, if you notice in all three charts, this tells you this is going to be a doozy to try to get through. But once it does, it's going to be a support level for a period of time. Now we're retesting our wedge. We're still going to have to get in here, that 31.50. And again, for me as a financial advisor, planner guy that used to do that, 31.50 would be a perfect place for me to do a stock purchase, $31.50, futures, 31.50, because it's a 50. Bankers don't like to think about 31.38. We don't look at that. We look at nickels, dimes, and quarters. And so nickel, dime, and quarters are the key thing to keep in mind, even with Forex. Forex markets like those round numbers, especially your yen pairs. Every pair has a personality that allows you to get to know it a little bit better. So understand, the big boys do not come in here and say, well, at 31.51.4, make sure you're a buyer. That does not happen. The big money doesn't do that. So most of the time in this lower time frame, you're trading against retail people or people who have algorithmic programming. These moves like here are bigger boys. These moves right here are just people like you and I that have maybe smaller accounts, can't move the market quite so fast. We just need more of us to move the market. Whereas down here, that could be it could actually be a mutual fund buying in a small amount, because on a 5 minute chart, that's really not a huge move, but that's a bigger move than what we can make on our own if we're using our own money. And so if you notice, we are now respecting this new wedge that we created, eyeballing, because wedges are everywhere. Wedges are everywhere. The key is understanding the original wedge alert that IRIS gives. Hey, good evening. I'm going to give you an opportunity to speak if you want. We're kind of keeping open mic tonight since there's a smaller group tonight. Our evening sessions are a little bit smaller, so they're a little more intimate. So if you want to open your mic, you can always open your mic. And that's a good thing. So we got
guys,
this.
I just joined. Sorry.
Hey, no worries. Great to have you in. So we're just going over. We got an IRIS alert at the 8 o'clock hour Central Time, and we drew our alert. But this was created. We eyeballed this one, Rashawn, and so we're just watching this one since we haven't had an alert yet. And so we did a manual one. So I wouldn't put a lot of weight in manual wedges that you see, but they are available sometimes from time to time, especially in these type of markets. So we did have a retest of the wedge. So you could have got, if you missed the exit here, you could have gotten right on the button right here, but we got in a little earlier than that. And now we're waiting for that resistance line at 3150. It says 31549. Go ahead and call it 3150 because we very rarely use the pipette. That's what that last digit's called, the pipette. It's rounded up to 3150. And that's why it's such a hard number to break through. We have that quarter number. If y'all are familiar with quarters or thirds, a lot of the bankers use quarters and institutions use quarters, nickels, dimes, and quarters. But quarters are the easy one. And we all know that bankers and financiers, governments don't want to do more work. They want to make more money by doing less work. And so they don't want to think about the pipettes and all that stuff. So we got 8 seconds before this candle closes, and then we can analyze it and see where we're at. Maybe.
Okay, you guys haven't bought into it as yet?
We are long the U.S. Canadian dollar on this one right now. Is that what you asked?
Yes.
Yeah. This is not a IRIS alert wedge that we drew this after the fact, but because of being so few alerts coming right now, I saw another wedge created with my own eyeballs and formed it.
Yeah.
And so we've been playing with this one since probably about 30 minutes ago to almost an hour. During this time of night, guys, well, I don't know where you're from, you guys are. It's 9:30 here in Texas. Where are you from?
Jamaica. It's 9:32.
Yeah, we're 9:30 here in Texas, and this is not a great time. Get around the 10 o'clock hour Central, 11 o'clock Eastern. That's when things start happening. The closer you get to 12, 1 o'clock in the morning Central, the better it becomes because more people start voluming in. People are preparing for the euro and the pound market to come play. When you start having the euro and the pound play, London is the biggest Forex center in the world, okay? When you finally enter that big world area, then your volatility becomes real. Your volume becomes real. This is just noise. This is just people like us hoping to make a buck, you know. This is not really anybody driving the markets. There's no government doing it because these governments that we're trading aren't open right now. They're not trading right now. So this is just the Asian market playing around with US CAD and speculating. Now, when you start getting into the euro markets, when the pound starts coming open, now you're starting to talk about world and global currency trading because now you're going to have Aussie, Kiwi, yen, pound, and euro. Okay? No Canadian, no US. That comes in later. Then when you get about that 4 o'clock in the morning when things really start settling down, you will notice on your IRIS alerts that a lot of alerts can come between 4 and 6 in the morning Central Time. Why is that? Because that's the slowdown of the London market, and a wedge is just a consolidation time, waiting for the next move up or up and out or down and out. Either one. It's just consolidating. Okay. If you're a strategist, this is what we call a pennant. And that's a technical analysis. I don't know how much technical analysis training you guys have had, but technical analysis tells me that if I want to measure from the origination of the move to the top of the flag is 18 pips. So technical analysis says from the time that it breaks the top, it should be able to go, let me get this thing to work, it should be able to go 18 pips. which is up in here. I'm not saying it's going to do that. We got this big 62. Now, when you see the big blue line on our charts, that's the 62 30-minute moving average. On any of our charts, the big blue line is the 30-minute 62. That is what they call the median moving average. So if you're taking notes and you want to know a very key moving average to pay attention to, the 30, especially for day trading, the 30-minute 62 moving average is a key number to know. Why? Who knows? But it has historically, that seems to be a median number for the Forex market, and it seems to be pretty reliable. That it will bounce off, and if it breaks, it's going up. Right now, we're in great position with our moving averages, green, yellow, white. We're in good shape on the 1 minute. Looking over, let me flip over to my other screen here. Let me go back 1 minute. Let's go back here. Let's see what our colors are on this one. Again, there's that giant blue line looming, but our profits before that, so we're in good shape there. So we're in great shape with this one moving average wise. Green, yellow, purple. So green, yellow, purple is equated to green, yellow, white. It's the same. So our moving averages are fine. Our strength meter still is strong with the US and CAD. This is just telling me this slow move is because we really don't have volume to push it. We have strength in the currency, but no volume to push it right now. So that's why it's a little bit more risky to trade at this time. That's why I was kind of hoping to have an Aussie trade because they had news coming out, but there's been no wedge setup. Let's look at our 15-minute and get a big picture. Again, this is about the time I'll be going, okay, I've been in this trade for an hour now. Most trades should last anywhere from 15 to 30 minutes at most. This is where I'm thinking, okay, I'm going to tighten up my stop. I'm getting ready to go to bed, and whatever happens, happens. There's our blue moving average that's still looming above us. That's going to be the wall, but I want you to look, we're going to have a little bit of a problem, but this could be a good solution for us. Green and yellow are in order, but our orange one, we can't seem to close above. So we need in 8 minutes a close above this, but that still means we're still going to hit this 31.55 area. That 31.50 still a resistance. That zone of 5 pips is still a huge piece for us to get through. And this is what you have to do with technical analysis. There is no manual system that is out there that there's nobody that can sell you a manual system where you don't have to understand something. Okay, you do have to spend some time in front of the screen. Al is fantastic in the mornings as far as trading. I'm more of a teacher. I do pretty well with teaching, but he does really, and I have no problem with swing. I'm still getting better. I'm still working at becoming more consistent with this. I think my average this month is 12% for this strategy. So I'm satisfied, but I'm seeing people getting 20 to 30% a month on this. So again, past performance is not guarantee of the future, but the potential should be that I should be able to do the same because they're using the same identical rules that Al and I are teaching. They're just some of our students who are doing better than we are, which is a good problem to have.
You said 230%.
Yeah, that's what some of them are getting. They're getting 20% a month.
Ah.
You got to have a long-term picture look at it. And honestly, guys, I'm perfectly content with a 5 to 10% month. I'm not a greedy kind of person. I've learned not to be. I've blown up too many accounts to not learn the lesson of greed does not pay. So I keep a real realistic. If you're brand new to manual trading, the biggest thing you guys have to fight is that gambling thing that says, I need to do this and learn it fast so I can make money fast. I need to be doing this quick. Because if you're doing that, you're going to jack up your account. It's just a fact. If you come in with, okay, I am willing to do the long haul. I'm willing to accept that 1 to 2% a day and grow my account and know that I'm going to have some days where I lose my 2%. And you at the end of the month, you got that 10%. That's 120% if you trade every month. But we have a hard time as traders thinking that that's 10%. I could do that. You know, most people can't. Most people cannot consistently get 10% a month over a 3 or 4 month period. We've been able to do that here, But most people can't do that. You'll see on Facebook and all the other social media, learn how you can get 100% in less than a month. Yeah, show me that strategy over a year, and I'll probably show you somebody who's not ever going to show you they're losing trades. I'm probably going to show you a strategy they're going to sell you that will work for a week or two, and then it'll be done and you won't know how to use it. So be very careful what you listen to. The cool thing about Auvoria Prime is they're putting traders in front of you that know what they're doing to teach you through it at no additional cost to you. Al and I have been trading. I've been 8 years trading Forex. Obviously, my background, as I mentioned, was in finance. Al is a retired pilot, so he's got that pilot engineer mindset. He's been trading for 15 years, up 20 years, and 15 to 20 years already. So he has a huge amount of experience. So you don't get that in most places. I've been to all sorts of companies that do software and stuff like that, and I've yet to see a company that does what Auvoria Prime does with coaching and availability of coaching. I've never seen them offer coaching on a daily basis like they do with Al and the Hawkeye strategy. Never seen it. So that's kind of cool. Let's see, we got nothing happening. Again, let's look at our strength meter. Now, notice here with the RCS tool, again, I'm going to mention this. We're going to be offering this, I think it's going to be next week. We're going to offer all these tools completely free for 30 days. Everything that's on our screen, use it or don't. You don't have to. You can turn them all off if you want, but learn how to use them, and I think you're going to be very pleasantly surprised. On my account, and we will show you how to set them up. We will show you how to use them properly, turn them off, things like that. And the RCS tool, as well as the fib tool, is going to also be available on MT4 if you rather MT4. I love TradingView, but just so you guys know, I chose this mess. This is my choice. I'm very OCD. So this bothered me at first. So if it bothers you, you can trim this down to only the pair that you're seeing. But I found that it was very, very useful for me to know what the overall market is doing. Who's strong, who's weak. So right now, I would love to see a pound US wedge come up, a wedge alert, because the US is strong and the pound is weak. Now notice on the US, we're still stronger than the CAD, but it's only by 2 now. We like to have that 3 spread when possible. And notice what's happening to our wedge. Remember, this was my personal wedge. The other wedge is still down here, still valid. But if this thing comes down and closes below my purple line here, I'm going to close it out for a much smaller loss than 7 pips. That's how we trade manage. But if you notice how we do it on the bottom here, I only have the strength meter for those 2 pairs. It's locked to the top here. I like to see what the overall market's doing, who's moving, who's shaking. If you start seeing, you start getting used to these tools, then make sure that your pair that you're trading is not the one doing the flipping. You don't want yours moving all over the place. You don't want it going from 5 to 3 to 4 to 2 to 2 to 5. That means there's no real idea of where it's going. And you don't want to be caught in that. Now, that will happen on the 1-minute chart. Do not make your trading based on the 1-minute chart. So let me go ahead and open this up again, because there's something I would like to view. I love the whole moving average. Love it. I use it in my swing trading, not to trade by, but as a strong indication of where momentum is. On the 15-minute chart, momentum is still green with the whole moving average, so it still says it's a buy. On the 5-minute chart, it says it's still a buy, so that's a good sign. On the 1-minute chart, it is a sell, but if you notice, the RSI is pointing up, so I'm assuming we're going to have a move up. But if you notice, our lines are no longer in order here. Green has crossed below yellow. It's kind of a mess right now, so we could very well go sideways again. And if we were just not loving this pair, we could easily close it out for a small loss, or we can patiently wait. That goes back to trader's personality. Guys, if you're new to trading, I've got some great books, and you can email me at hawkeye@auvoriaprime.com. Great books on mindset. I've got one that I would recommend called Get Rid of Your Head Trash About Money. Matter of fact, one of our traders that comes in the morning, she quit her job to trade after she read the Get Rid of Your Head Trash About Money because it changed her whole perspective. It's a fantastic, it has nothing really to do with trading, but it has to do all with the mindset of what are you doing and why are you doing it? And you are your worst enemy when it comes to your mindset. So far, we're just waiting again. Again, we go through this process of sit and wait. And again, in the evening times, just know that it's pretty, you're going to have to be very, very patient in the evening times. Now, if you're a late person, you like to stay up late, or if you're on the other side of the world, there's nothing, waiting is not a big deal. But like for me, I'll be up at 4 o'clock in the morning getting ready to go to fourth grade class again. I arrive at school at 6 and get prepared for my kids. So staying up is not my thing. So again, I would normally right around 10, if by chance, if I'm staying in here, or maybe I'm watching, the news or whatever, and I'm trading, seeing what Bloomberg's saying, and I'm just saying, man, I'm tired. If you notice, I'm barely having any loss at this point. I may pull my stop up to this last pivot, maybe this pivot here, and just say, whatever happens, happens. And if I lose, great. If I don't, that's fine too. But I would sure love to see the pound US. So I'm going to quickly go over here just to see what it's doing. It should be pointing, I was going to say it should be pointing up, but it's pointing down. Wow. Let's jump in here and look at the 15-minute though. That's not what I was expecting to see. With the strength meter, I'm going to turn some of this noise off so you guys can see. Okay, now that makes more sense. Yeah, we're having the same picture as we see with the US CAD. You had your strong move out, and now it's just kind of doing its thing. But this tells me we very well could have a push up. But when we have these numbers like this, I'm repeating myself because hopefully this will help you guys when you get your tools and you're able to use them. When you have these numbers like this, and they're so far apart and they're up and the chart's showing you opposite, it just tells you you have no volume to move it. Okay. Again, no volume to move. Notice the CAD has moved up again in the strength meter, but whole moving average is showing short. Our RSI is showing short. Our price is below 2 of the moving averages, but our strength meter shows the US is the strongest and the pound is the weakest. So we just don't have volume. There's no volume. Why? Because these markets aren't open yet. Moving over to the Aussie US, now we have a better picture. Okay, this is actually a nice move. It's almost the same picture we have on the US CAD. The difference being, though, we're in an open market. Let's see what the strength meter says on the 15 once it loads up. And if we don't get a wedge alert in the next 5 minutes, we're probably just going to call it a night and see what happens because there's no reason to sit and wait. You got better things to do. Okay, yeah, okay. So we got the US still being strong. The Aussie is 4. Now it's 5. Okay, so let's see what we got here. Let's look at a possible 15-minute eyeball wedge. I like, again, to use the triangle. I'm going to do this, this, and this, and then I'm going to straighten that out. It's not a great wedge, and it's pretty, I think that's probably your better bet.
So I always see Al use that
the triangle. Yeah,
lines.
I like it because it gives me a couple of other things inside. Now, if you're a beginner, you may not want to use the triangle. You may want to just draw trend lines.
Yeah, that's what I do.
Yeah, and that's okay too. But I want you to notice what happens when you use this wedge tool, the triangle. The blue MA is the 30-minute 62, Michael. We have it programmed. Part of the tools allow you to program the 30-minute on all 3 time frames and incorporate the 30 moving average 62. That's a big one. But I want you guys to notice this. This is why I like the triangle. It doesn't make it better or worse than trend lines, but here's what I got. When I drew my wedge, it draws another trend line in here for me. And look what it's done. It's respecting this trend line right here. And then, not mistakenly, you drew your C right here, and it's respecting that trend line. So this is another one of those advanced things that if I had everything in order, the only thing I don't have in order is this to turn green. If these numbers were like they are, and they remain that way, and if this were to turn green, and this was right here, that's an early entry for me. And that's an aggressive entry. Let me just make sure that's an aggressive entry. But I would come in here and do this. And I'm going to pretend that we have everything in order, guys. Don't do this. This is just to show you what I could do as an aggressive opportunity. I would come in. I would say 7 pips. I would give myself a target, a stop. And then I would go in just like that on a 15-minute chart, just like this. Now, what I've done is I've created a target inside of my wedge, which we would expect to be able to make. But my risk is that it breaks below the wedge and the move is actually should be short. However, if you notice, I have a nice orange. I think that's the 5. You got the 513. And what is the other one? 513. You got me lying.
62.
62's down here.
Oh,
62's down here. Let me go.
so you're using.
Let's see. It's the 513 and maybe nope.
So yeah, I was wondering if you use 3 moving averages.
It's the 62 on the 15-minute chart. Yeah, that's what that is. So you have the 62 on the 15-minute chart, and the 30-minute is the 62 on the as a 30-minute 62. So you got a 15-minute 62 and the 30-minute. The 30-minute it usually turns out to be your Forex mean line. That's where things priced tend to go back to. So in this look, I am betting that the 15-minute 62 will be my foundation. If it breaks below, then I'm looking to go short and close this long position out. As of right now, it shouldn't happen, according to our power tool. However, our whole moving average says to be short. So normally I would not have done that trade because everything's not in order. My hole's showing short. I won't know for another 8 minutes if that's going to hold long or short on the 15. My power's plenty of spread. My RSI is on the bottom, which would expect it to move up. And I have a moving average. It's a little bit risky. Not all the pieces are in play right now. Not all of them are come together. But we play it. And I can even, in all honesty, I could even take my fib tool and see if okay. If you notice, my fib tool identified a supply line right where we're at. So this is going to be a battle. This could be, again, this could be good, because what was once resistance becomes support, and that's where we're sitting at. It's the 72.32 line. If it bounces off of that, that's a good sign. But if it breaks below it, red lines represent strong resistance. Again, this is a little bit advanced. We had our basics in the very, very, very beginning. This is definitely advanced, but it's not hard to learn. Okay, so I'm going to fix this right here because that B frustrates me. There you go. And I'm guessing that this is going to be a little bit more harder to predict. My bet is we're going to come down in here, and then we're going to waver along this line and slowly grind up.
So question.
Uh-huh.
I know the zones and stuff as well, right? Along with the wedges. How do you determine which is a strong resistance zone or
yeah. Oh, you got a couple things. Again, that's having hours in front of a screen. You've got a couple things that we use inside. Obviously, just like I mentioned before, I developed this strategy with my swing trading that I realized that there are price points within Forex that seem to happen all the time. And so you can look at this move away and understand anytime you have a trend line, there's going to be some sort of resistance or support there. It's just, we just don't know how much. But this fib tool that we created, it's called the FPRP right now. That is a huge one. Notice if I turn it off, you can't see. Right now there's a red line sitting where price currently is at. If I turn this on, it gets brighter because there's a strong area of price action sitting right where we are at right now. And how is that determined? That's plotted already for you. If you have this tool, you'll see a green. That green represents strong demand. So if you look back here, look back here, it bounced off of this and moved out and never has been back. So my bet, it wouldn't surprise me in a bigger picture, a longer term, which we don't want to be, that this thing comes right back here and bounces and then goes between these. But it's going to bounce between green and red and then red and blue. Blue represents a strong wall. It's stronger than red and green. So if I squish this up a little bit more, you're going to notice another blue. Now, if you go back in history, if it lets me go back in history, you're going to notice a very powerful move off of this blue line right here. Now, these blue lines and red lines are not price based on the candlesticks. They don't change. They don't change at all. On every chart that is other than a yen, on the 15-minute, this green line will always be 71.70, always. It doesn't change. So I will make it very clear that this tool is not based on what the candles are doing. These, I can remove the candles and these won't move. They're still going to be there. But they do tell us where price seems to always do something. Look at this right here. Look at that mess. Right on the green line. We go to the red. Historically, we had some mess. Now, I bet you back here we had a little bit more. Now, if you've spent any time in study of this, let me see where it's at right here. Where did it go? Did I turn it off? No, it's there. Let me go back. There. It didn't let me go back. That's what it's doing. It won't let me go back that far. Let me squish this up a little bit. If you look at price back here, constantly hitting this 71.50 area, 71.70, I should say. And then we have this resistance. This is called a drop base drop. I don't know if you guys are familiar with that. That basing right there is a consolidation point. Where did that consolidation point happen? At a price that it's always happened in the past. If you can see this little wick right here on this, it came to that price and it broke. It came and it finally broke up past it, came back, tested it, and it became what was once resistance becomes support until it becomes resistance again. So right here, it finally came, it stopped again, and it finally broke down below. It retested it and fell away. It tried to retest that line again and fell away. And it's bouncing between red and green right now. That's what it's doing. It's just bouncing. Now, do we have overshoots? Yeah, we have overshoots. And on my day trading, my swing trading things, I show another thing that you can do inside of these tools, but I don't do it on my 15-minute chart. It gets to be too much. It's too much to comprehend. These are all Fibonacci lines, guys. That's all they are. But they're not the Fibonacci retracement tools. They're not based on a high and low. These are standard numbers across the board. So if I went to 71.70 on any US chart, let's see if I can go 71.70. 71.70 may not even be on this thing. It's too far away. So let's go to this one. There we go.
So Fibonacci is something I'm still trying to fully understand.
Well, that's the cool thing. Dude, I'm horrible. I'm a math guy, but when the developer, when he saw what I was doing, he says, you realize you're using Fibonacci's. And I didn't even know what a Fibonacci was. I'm going, I have no idea what you're talking about. He says, you're plotting standard Fibonacci numbers based on a clock. Now, he's a programmer. I'm not. I said, I don't know what you're talking about. It's a foreign language to me. He says, let me program what you're doing and then you'll understand. So when I say they're standard price, it's not candle based. They're fib numbers based on a clock. It's not that retracement of, hey, I'm going to get a Fibonacci tool. Let's see. And I'm going to draw from, like, let's see if this has a fib on it. Fib, retracement. Where is it at? Fib. Right here. Apparently, a fib retracement does something like this, where you do that. Well, to me, that's not mechanical enough. That's subjective. Which high do you use? Which low do you use? Now, Al will sometimes use that, but this makes zero sense to me. Absolutely zero sense.
I think that's what that's the problem I'm having, trying to make sense of it.
I don't get it.
Yeah.
I don't, but I definitely get this line right here. I definitely understand that prices reacted to it constantly reacting to it. So there must be something with this price that's more important than any Fibonacci. But what it come to find out is we found out that this is Fibonacci numbers. It's just not based on a random high and a random low. It's standard price. So on any chart, you will find any US non-yen, any non-yen pair at 3150, 1.3. If that price is there, there's going to be a demand green line on a 15-minute chart. It's going to be there. So you can memorize these numbers. On my daily swing stuff, when I put it on my daily, I memorize pretty much the numbers. I know where the blue lines fall. I know where the red lines fall on every pair because it's the same number on every pair except for yen pairs. Yen pairs I have a hard time memorizing. That's the beautiful part about this tool. If you hang with us long enough, you will see the same thing. It just takes time.
So you say you created that with what?
Yeah.
Trend line?
The trend, yeah, I drew this trend line. This is based on the alert that we got at this time. And right. I showed them the triangle first, and then I showed the trend line. And then I knew that because of the time of day that we probably wouldn't have a big movement, and we haven't. So I saw another wedge developing, so I used the triangle, this little triangle, to try to capture a trade so I could show everybody just how it looks and how to manage it. It's not a great wedge, don't get me wrong. I mean, it's not an IRIS wedge. It's not an IRIS alert. And IRIS alerts are a little bit more reliable because it's mechanical and artificial intelligence. They're not using they don't have eyeballs. It's completely mechanical. It's not subjective at all. It's going to give you an alert based on what it's identifying based on mathematics, which is not questionable. Okay. Yeah. Whereas our eyeballs, that's what we're trying to get away from. We're trying to get away from the subjectiveness of trading and make it extremely boring and mechanical. That's the key. If you can make your trading sessions more about enjoying the community than about the over analysis of trading and the mechanical and your trading becomes boring, that means you're going to become successful. Because if you're getting hyped up, that means it's more gambling for you and you're looking for a high. And everybody, especially guys, that's why women make such great traders. They're not normally as highly competitive. They're not into ego quite as much, and they don't mind being patient. They don't have.
Are there females in this group?
There are in the morning. We've had some in the evening.
No, this present group.
I don't know if there's any females here. It doesn't look like it, not from what I can tell.
I think their egos are bigger than ours. Just that we show it more.
They can be, but they're what's funny about their egos, it doesn't cause them to make the mistakes of greed like we do.
Yeah, that's true.
It's a different kind of ego.
That's true. I've seen it personally.
Yeah, I'm a teacher in elementary, and I work with 95% of our teachers are women, and their confidence is completely different. They don't have to show you they're good.
Yeah.
They know it, and us guys like to prove it.
Yeah, it's just different. So.
Yeah, and that's what makes us unique. And that's the thing about trading is you have to know I have to do things differently than you guys with trading because of my personality. I'm highly competitive. I'm not a greedy person, but I hate to lose. And I have a quick finger on an entry. So what do? I have a trade plan that allows me to have a quick entry, but I'm also a very good trade manager. I recognize when a trade is not good and get out. That's my gift. I get in sometimes too fast, but I'm very, very good at trade management. Whereas Al is very patient. His entries are fantastic. But he's on swing trading, he can't swing trade like I do because I can be in a trade for months. And he's going, man, this is horrible. I can't handle that for a month. It works. My picture hasn't changed. So yeah, I'm telling you, FPRP matches like it. Yeah, exactly. FPRP is a powerful fib tool. That's why people aren't going to realize When you guys becoming Auvoria Prime, just got the agreement started between the developers and Auvoria Prime. Al and I connected the developers to Auvoria Prime. Auvoria Prime agreed to allow us to share these tools on our systems and allow us to give them for 30-day trial. And then you guys as Auvoria Prime will have access to them if you want them as an add-on for a very low fee. They're going to be cheap. This type of stuff.
Because I was going to say that I didn't see it.
Yeah, we're going to be releasing it. I'm guessing it's either going to be this next week we're going to go free, or we may do it after the beginning of the holiday. Here in the United States, we have a holiday coming up, Labor Day. We may release it after that to give you a full 30 days. 30 days free trial, and if you like the tools, you can purchase them as an add-on. And the add-on is nothing. I mean, I saw what they're offering. I'm thinking, are you kidding? You couldn't get this. It's over 20 indicators here, 20 tools. If you break and open these things and you look what's in each of them and you set there's incredible amount of tools in these. But what it does is it allows you to use TradingView without spending a lot of money, because TradingView only allows you to have 3 in the free service. We have 4, so that means you just got to go to the one level up, unless you really just want to go nuts and get TradingView full blown, which I don't do. I don't want to pay more money for TradingView. I love TradingView, but I don't want to pay more money for it. So, well, guys, it is 10 o'clock and we've had 0 alerts. Let's double check one more time. Yeah, there's no alerts coming right now. So I'm going to go ahead and leave this as is, and we'll see what happens. Keep an eye on it, your own charts, mark it up, because if you notice, we're respecting this 15-minute 62. We can't close above it, which was also our supply, actually our demand line was sitting right here as well. So this could be a long night of trying to wade through this. I think it's going to end up hitting our target, but if not, this is what I will do. I'm just going to say it right now. I would move my stop to here, and I would modify it, and I'm going to go to bed. That's what I'm going to do. So guys, I appreciate you guys. You got any more questions before we bolt out of here?
Yes. What's your stop loss and take profits?
In this case, I'm going for 7 pips, and this is actually okay. I actually put it a little lower because there's another pip. So I got 7 pips here. What we do is 7 pips away. We use 2% of our account. Now, I do a little different. I use 1% on the first entry, then I add to my position another 1%. That's how I do it. Al does multiple, but we always encourage new people, just start with a simple 2%, 1 trade, and then you can do add-ons later. And then our stop is normally 7 as well. As you can see right now, I'm sitting just about 6, but I want to make sure I cover for spread, which is at 2 pips. So I see this chart. If it breaks below this yellow line right here, it's pretty well going to move further down, probably down in this area. So I want to save as many pips as I possibly can. So I modify up. And if I happen to lose, I lost a whopping, 5 pips. Yeah. And it does not kill your account. However, if you are consistent, I'm about 65% wins and 35% losses at this point over the last 2 months, up 12%, I think, about for August. And so you're not having everyday wins, and that's not ever going to happen. But the key is to minimize those losses and then take advantage of when those 7 pips moves and take it and get out of there. That's the key. Yeah. All right, guys. I'm already in it. So are you already in it? Let's cross our fingers. Because there is little to no volume right now. It's just insane. And we'll look at
normally when I make these trades, nothing happens until around 1 o'clock.
Yeah, exactly. You get it a little bit later, and then you'll start seeing a big move. You'll either make your target quick or you'll hit your stop fast. Either one. You're going to usually around midnight. You're going to end up getting out of the trade somehow, and then be real building again. So
one more question. Just
yes, sir.
As an advice, have you been watching the gold?
I don't watch gold. I own gold, but I don't trade gold. I use my gold strictly as a hedge only. Now, Al has been when the gold alerts come through AIRIS, we don't pay attention to gold. It's a little bit more volatile, and so you have to have a different kind of strategy than what we use here.
Yeah, because I got a news alert And I don't know if you have ever used the news alert. Today was the first time I tried using a news alert, and they tell you like what's gonna happen, what price is gonna dip, what stop loss and take profits to set. And
you know, I don't know about, you know, again, I've been doing this long enough. There is nobody knowing where it's going to go. There's no way for you to predict that. It's impossible. The only way you can predict that is if you got big money. And you can make those things happen. Banks, institutions, governments, and large companies that invest in Forex, they can make that happen. They can call their shots. But as far as the speculators, retail people, I go for price action. If I see this,
definitely.
There won't be a news item that convinces me that when it comes back down here, it's not going to react.
Yeah, because what happened, the FDS broker that I use, I saw where it gave a news and gave that recommendation, and I saw it happen once. So I said, okay, let me give it a try with GJ, you know?
Yeah.
And I've been in that trade from this afternoon, and it's...
I never trust a broker. I don't care which ones they are.
Yeah.
I don't trust them. And as a matter of fact, on my swing trading, when I place a trade, I put my stop 600 pips away.
Yeah.
And the reason I do that is not because my average stop is 47, but why would I put it 600? Because I don't trust one daggum broker to not take the other side of my trade. And if they're going to try that with me, then I'm going to put my stop so far away that it makes no sense why that would happen. And then I could go back to them and say, okay, you ripped me off. And then they lose their licenses. So I manually watch my stops, but I put them so far away that they can't be touched. And I manually stop myself out when I see that happening. So, all right, guys, I'm going to get out of here. I'm going to stop the recording. It will be on the Hawkeye channel. Also, if you scroll up into the, let me go ahead and do this again. We have a brand new email address for you guys. If you have any questions regarding not trading, but wedge trading with the IRIS alert, or you have a screenshot you want us to look at, make sure you send it to Hawkeye@AuvoriaPrime.com, and we will check that regularly. We'll try to stay on top of it. Al and I will try to do our best to answer. It's a brand new email, so we have to get used to checking that email as well. But that'll give you a place to go if you have a screenshot of a wedge that you've drawn, you want an opinion on that particular drawing of that wedge, or you have a question about any of the tools that are coming out. That's the email that you're going to want to use to contact us. Y'all have a great night. Thanks for coming out, and we will see you guys either in the morning or the next evening session. God bless.
Thank you.